or 5. If you look at all the headlines today in the papers, it's all about what? The finance bill. Civil servants defy order on new taxes. Public service employees say the proposed tax measures will eat up to 52% of their pay. So the finance bill was published last week by the National Treasury. The National Assembly's Finance Committee has already called for input on this particular finance bill. The finance bill is basically how the government is going to finance the 3.6 trillion shilling budget that it's proposing to have for the next financial year. And Billow is here to explain to us what this means. Good morning.
Morning, Eric.
Good to have you here again.
Yes. This finance bill, we have to... It's what they call an omnibus bill. It's a bill that has not just revenue measures, how the government intends to raise revenue to meet its expenditure budget, but finance bill also carries a lot of the government's policies on the economy and many other changes that the government want. If you will, it carries the fine print of what the government doesn't want you to see when they want to make legislation. Everything is put normally into a very complex bill that only experts can understand. I mean, if you try to go through it, you can't. I mean, all it says is that in this act, for example, Income Tax Act, delete
amend
a million
by deleting the word million. Replace it.
You can't unless you very familiar with you have all those laws spread in front of you. It's one of those bills the government uses when they want to push in some of the legislation that they don't want people to readily understand. Number 2, let us contextualize the business environment or the environment in which you are in. Last week, the economic survey report was released. It gave a very rosy picture of the past 1 year. It said our economy grew by 4.8%.
Yep.
If you are in the developed world or anywhere in the Western countries, 4.8, your government would be elected unopposed, literally, because that's a very good performance. But you remember in our last year election, the previous administration and the current administration, they both alluded to the fact that the economy was in ICU. Yeah. The economy had collapsed. Yes. They said the economy was finished. It was on that platform on which this government campaigned and came in. So there is a disconnect. You have an economy that we were told was in ICU, and another one that the report says, it did very well, 4.8. You can't find 4.8 in many countries of the world.
Or maybe it did very well in the ICU.
Well, what normally happens is what the economic survey looks at, where they have statistics, is the modern sector of the economy, what I call sometimes the elitist sectors of the economy, the banks, the financial institutions, and the telcos, and those ones that you can really see. But this is a subsistence economy. 80% of the people here survive on subsistence economy. Informal sector accounts for 80% of the jobs. These things are not things you can capture readily. So that's why when you're out there, you find the economy is bad. But when you look at the figures in Treasury, you find, these things are doing. The second thing I want to contextualize with is the IMF. This government came and they faced West. They became the darling of the West.
Yeah.
Today, in the US and in UK and those countries, Kenya is their darling. And when you become the darling of the West, then you have to, they send IMF and World Bank running. Welcome. You want money? And IMF is about one thing: borrow more and tax more in order to pay that loan. This is why last week the IMF managing director who was in the country, was so emphatic. She said, our debt is sustainable.
Yeah.
The government can borrow. We are not at risk of defaulting our loans. She even was asked about the Eurobond, over $2 billion that's due soon. And she said, no, what's the problem? If you can pay it through taxes, we can get loans from commercial banks. Kenya government is doing well. So IMF is now the one calling the shots. And where you see IMF, prepare for more taxes, because their main concern is that you should be able to pay the people who lend you money. That's their main concern. So I think when you look at it in that sense, then you would expect some of these measures that we have seen. And I have categorized them into 3 or 4, and we'll look at it in details later. But in 3 or 4, one, there are some which are positive.
Yeah.
There are some of the measures which are plainly punitive, really, to taxpayers and burdensome, There are others which I think are unconstitutional. In fact, you just can't have them. Today, and others which really are not are counterproductive for investors and businesses. You can't have some of those policies and expect people to come and invest. I won't, for example, think of expanding my business or investing in this country with some of those measures that this government has introduced.
Put in place.
So I would categorize them into those broader.
Okay.
Yeah.
First of all, Mushimo, just explain to us this entire budgeting cycle up to the point where we get the finance bill. Because the finance bill is coming to say, this is how I'm going to fund the budget. Yeah, what comes at what stage, and what happens after this stage?
You see, under the new constitution, the process of budgeting has changed significantly from 2010. You'll recall that in the past, budgeting was something that was entirely done by Treasury. And these measures, like the ones that have been published now, would be in the briefcase that the minister would be carrying. You would not know about it, what taxes are going to increase, which ones will reduce, and those things used to be kept. But under 2010, the whole process of budgeting was underpinned by the need to enhance transparency. Number one. Number two, to get as much public participation as possible. And number three, to give Parliament, which is legally the representatives of the people, a larger role in the whole process of budgeting. This is why then the process starts, very, very early, from around September of the previous year. But by February, some of the budget documents, which we call the budget policy papers, for example, or the budget policy statement, is released in February. This is it gives, if you will, the strategic direction or the policy that the government wants to pursue, so that this finance bill and the estimates that will come would reflect that policy and that strategy. So that policy is debated and discussed by Parliament with the input of the public through public participation. So when those budget strategy papers have all been agreed, so this is supposed to reflect that generally, in a sense. So what comes here now is then the finance bill is published around April normally. And this gives the members of Parliament, the parliamentary committees, a chance to look at of the bill. And the bill is basically about how to raise revenue in order to meet the target that has been set for Kerrow. You will remember when the budget policy documents were done in February, they had set a target of 3.6 trillion as an expenditure target, and that they intend to raise revenues of almost close to 2.9 trillion. So this bill is supposed to come up with additional measures that will give that incremental amount of revenue that's required to achieve that target. And so from here now it goes to Parliament, and Parliament will obviously get the views of the public, and so whatever then is agreed, and the final is what goes into the budget day statement that he comes to read, which is basically a government's policy, economic policy, like for the next summary of 1 year. And it will also, after this, of course, the next thing that will get published then, is before even it comes for the budget, is the estimates. The estimates, which are the appropriations, how they intend to spend the money that they will collect and so forth. So after that, then of course the budget will be read out, which will be basically it ought not to be there, but you remember we allowed it because that's a culture that people
use. It's a tradition.
But it's supposed to be a policy statement really on what the government wants to do in terms of the economy. And many of the government's policies and plans generally, not just on the economy, they get announced in that statement. So
the finance bill is, once Parliament has already approved the budget policy statement, it has said it's okay, you can spend 3.6 trillion shillings next year. And it looks like you want to raise 2.9 trillion shillings through taxes and other revenues. That's okay, go ahead. So finance bill is coming just to explain how these 2.9 trillion shillings will be raised.
Yes, they need to raise.
So it's a fait accompli then?
Of course, many of the budget documents rarely get amended, even with Parliament putting it as input, by the way.
Okay.
It's not always that they amend.
So when you talk about, previously you talk about this document then being made public to underpin the need for transparency after 2010, right? So why are we doing this then? If the last statement that you've made is actually the truth, why are we going through the rigors of public participation? Why are we going through all of this where people are going to come out and be quite upset about possibly half their earnings being taxed because government needs to fund this ballooning budget? Why are these processes taking place if truly it is a fait accompli? Why waste this time?
Because we are hopeful that someone someday will listen, and hopefully they may not accept everything that we say, but if all the civil servants go on the street, they may say, okay, let's defer the NHIF increments, or let's defer the housing levy of 3%, or they might. So it's a possibility that given in government it's about pressure. So if the pressure exerted is huge, and Parliament itself, for example, says, no, this one we are not going to accept, then you might get away with some amendment here and there. But is that because of that hope, because of that, people have to keep trying. You don't give up. If you keep quiet and say this is fait accompli, then of course but generally the practice has been what has been, presented as Treasury has always
is there perhaps
succeeded.
Also then an underlying expectation that the people of Kenya will not push back enough, and so they know that once it's already documented in this manner, the pushback is unlikely to be anything, earth moving, so they know it's going to go ahead. So then a pushback, like the rumblings of which we've seen then, is unexpected.
The critical pushback is not expected so much. That is Parliament. The ones who have the right and have the teeth to take a pen and say, remove that one. That is the expectation from Treasury always, that Parliament will play ball with the executive and they will let through most of this. You have seen one of the most mundane things that has happened a couple of weeks ago is when Senate agreed with Treasury on the reduction of the amount of money that goes to counties. Yeah. And Senate only exists to serve the interest or protect the interest of the county. So they worry about Parliament, and when Parliament is in your pocket, you don't worry so much. You'd expect to get away with 99% of these things.
So Parliament has already let us down this far. Okay, because we started raising these issues with the budget policy statement. 3.6 trillion shillings. Why do you need to spend 3.6 trillion shillings? Have you gotten to understand why we need to have a budget of 3.6 trillion shillings in the next financial year? Because the previous one was 3.2. The current financial year is 3.2 trillion. When the president went to Parliament for his first inaugural address to Parliament, he said, in fact, that 3.2 trillion shillings, I could cut 300 billion shillings like this. And I even said, I want the National Treasury to cut 300 billion shillings, which means in Kenya Kwanza's mind, this year's financial budget should be 3.2 minus 300. How much is that? 2.9. Their budget is 2.9 trillion shillings. So they've jumped from 2.9 trillion to 3.6 trillion shillings.
Even more importantly, look at it from another perspective. The expenditure is about the revenue. The revenue you collected, or you expect to collect by June this year, your targeting is about 2 trillion or less. Because 2021, 2022 was 2 trillion. This year, KRA is already 100 billion behind the target. So assume it gets the 2 trillion. You don't expect to collect more than 2 trillion. The situation is not good, and you want to spend 3.6
something
trillion.
I've never understood.
I mean, you can see the disconnect between the expenditure and the revenues.
Explain this to me, because I honestly don't understand this. We collect 2 trillion or thereabouts. What stops us from working with the 2 trillion? Why must we think of the trillions we don't have? I'm sure there's logic. I want to understand this logic. We know this is what we collect, but we insist that we must spend more.
It's the politics. They need to be re-elected. The campaigns, the future. Those are the things which make you spend more than what you have. You want to please everyone so that you become the darling of everyone in the country and you get elected. That is the whole thing. Our actions are largely determined by the politics, by the way. We don't look at 2023 and say we have 4 years to the next election. Let's try and run the country now. Every decision being made is about how it will impact
On 2027.
on the next poll, and how would I be seen? And I want to be seen to have done very well. I want to be seen to have done better than the previous government. And so we are used to living larger than life. You know, we live very conspicuously. The government is known to be the most extravagant in the region. We really live large compared to any other government in Eastern Central Africa.
Can you look? There's a lot of, just like we said, when this bill, at least when we saw the initial documentation come out, and then thereafter there are the rumblings, and you have a population that is quite worried about what it's going to mean to the little that they have in their hands today. What exactly does this bill portend then for the money that you will earn as a Kenyan today?
Let me look at it from two perspectives. One, generally, revenue is generated from two major sources. One is the businesses, right?
Yeah.
These are duties and VAT and other income taxes and so forth from businesses. The second is from employees, the taxes on their income. On the businesses, I would say really some of the measures that have been put in here are quite counterproductive. It would not encourage investors. You would not feel like coming to Kenya. You would be better off going to Uganda, better off going to Egypt, or South Africa for that matter. And there are many reasons. For example, the cost of, in business, when you're producing something, you want to be very competitive in your pricing. You want to sell whatever you produce. If whatever you produce is going to be overpriced because of the high cost of production, you can compete with the others in the market. So generally, our competitiveness in the region has been going down because one of the very high cost of power and the very many other additional ones, but the most important being the taxation. So, for example, I'll give you one which is ridiculous. When you say, if you have a dispute with KRA on a tax, and you have gone to a tribunal, and there's no agreement, and you want to go to court, you cannot go until you put 20% deposit. And if you have lived in this country and doing business, KRA always comes up with arbitrary tax assessment. This is their tradition, especially in the last 10 years. And I'll give you, even my own small business, they have come to me a couple of years ago and said, we want 2 billion.
2 billion.
2 billion in taxes. I told them, okay, take the business and give me the change, please. Give me $1 billion. Because this is not even worth $1 billion or even $500 million. And you want 2 billion, which means I have made a profit of over 10 billion for them to ask for a demand of. So, if this matter goes to their tribunal, and you want to, dispute that case and contest, put 20%. There's no business which will survive that kind of thing.
So just in your case, for example, just remove 400 million and put in an account somewhere.
Yes.
To be sitting somewhere
and you know how the process of the court cases go. It can go on for the next 4 or 5 years. So and then you expand the dividend, the tax on dividend to 15%. I find it ridiculously high. For example, I do a business. Why do I do a business? I want to make profits.
Yeah.
So I make my profits, and you tax me 30% corporation tax on my profit.
Yeah.
So I pay 30%.
Yeah.
The net now that remains, I want to take it as my dividend as a shareholder. See, we want 15%. Pay 15% on that net again. So
essentially you're taxing 45%.
Essentially. Yeah, basically, because you are the owner of the business, you are the shareholder, you are the business.
Yep.
You will end up paying up to 45%. And then you have introduced so many other costs. For example, when you tell my employee, my CEO, anything above 500,000 now, I pay additional 5% tax.
In addition to what you already pay.
Oh yes, the taxes will be more.
Yeah.
You will pay tax for NHIF more.
Yeah.
You will pay NSSF more.
Housing
You will
fund.
pay housing more. Everything the employer has to contribute an equivalent amount. This is business. So you will discourage businesses from making further investments.
It almost seems as though...
Before I even come to the employees, you can see from the perspective of the business itself, it's quite a challenge carrying up all those burdens. So I think I find it a bit... and then, of course, there's one which is more serious. If you are in business, you would know. If now Spice FM invoices me, you run my advert.
Yeah.
And you invoice me, that invoice, according to this document now, in finance bill, must be an electronic tax invoice.
Yep.
Number one. if whether you are in Lamu or Nyeri or Mandera and you don't have those electronic things and you don't have an accounting software, or those things are not important to KRA. You must be electronic tax invoice. And two, you have to demonstrate that for me now to claim there's a VAT that will charge me.
Yep.
For me to claim that VAT, to offset that VAT against my VAT payable, I have to prove to KRA that you, Spice FM, has actually not only raised an electronic invoice and, of course, a taxable invoice and so forth, but you have actually paid your VAT. If I cannot demonstrate you have paid your VAT,
You cannot claim.
I cannot claim. Why should I struggle as a small businessman out there to try and confirm that, Spice FM has paid their VAT, has declared their tax?
How actually is it your bother? Is it your problem, really?
Huh?
I mean, how is it your problem whether Spice FM have paid their VAT or not? It's
Are
not
there pledges that the government made a couple of months, a week ago? The president said, look, one of the biggest challenges facing businesses is getting refunds.
Tax refunds.
And the situation of tax refund comes when you have a credit. You always get into a situation where you want money from KRA sometimes.
Yeah.
And he said, look, we are going to introduce some changes in this year. And you should be able to offset. If you have a claim on one form of tax, you should be able to offset against all the others.
Yeah.
For example, I have VAT refund due of 100 million from government. I have another one, pay as you earn or income tax or something payable to government. I should be able to offset. The situation now is you want hundreds of millions from government on one type of tax, but you cannot offset it again. Even within the withholding tax, for example.
You can't offset it within the system.
No, you can't. You have to pay them their money. The one you want from them, you'll have to wait. And then they introduce this 3 days thing. For example, withholding tax. Now, when I'm paying you now of the invoice of Spice FM, I should deduct 2%, what they call withholding tax, VAT withholding tax, 2% I must deduct and pay to KRA. It used to be paid by 20th of the following month, like the normal VAT and so forth. In this new law, I have to pay that 2% within 3 days.
Immediately
so I will be busy all the time trying to pay KRA.
Reconciling and paying
If
KRA.
you are an agent looking after my house, they used to collect, Now you become a withholding tax agent, the rent collector, like Lloyd Masikas and those guys who manage properties.
Yeah.
Now they have to deduct withholding tax and pay within 24 hours for them.
Withholding VAT now has to be paid within 3 days.
Tax should not be administratively burdensome, really. Yeah. It should not be difficult. It should not make things very difficult for business. Unfortunately, when you're looking for pennies all the time, you don't look at those things. KRA has a target. They're being told we want 3.6 this year. Next year, they've already been told 4. By 2027, they've already been told 6 trillion is what is required. So these guys, they will just sit down and say, okay, let us hang the guys one by one.
Before we even get to employees.
Hey,
Okay. So this was all really looking scary already, and everybody wants to retreat to their bunker. I don't know, you're calling it hope, but okay. And that was just businesses, Billow. Now, employees, these employees are already crying and may not even understand the length and breadth of what this actually does mean. You said you were going to tell us now, what does it mean for employees who then will face a lot of these issues coming up under this bill?
Employees have two challenges. One from KRA and one from the employer. The employer would obviously, inevitably, try to, cut costs. So what would that mean? It means some employees will be fired. You'll reduce your costs. You'll lose jobs. Some benefits will go. Some pay will reduce. So the employer would probably do that, and that will impact on the employees significantly. The second, of course, is their net take home. What goes into their pockets will be reduced if everything here sees the light of the day. In terms of the additional taxes, additional levies, all this. Thirdly, the employee also suffers in the economy, because what all these things mean, and quite a number of them actually, would result in higher cost of living. For example, the fuel. Once you remove the 8%, then unless they amend it, It means the 16% remains on VAT on fuel. If you are expanding, so many other turnover tax threshold has been expanded, and many of these measures will also mean the cost of living will go up. That again means employees would be under pressure to try and make a living on the little money that they are going to earn. So employees, yes, they will be impacted significantly. This is why you see all these organizations really
the unions coming out.
The unions coming out that you can't. This is, look at it. Look at the environment. You have come on to power on a platform that the economy is in ICU. Things are bad. That is not the time to start taxing your people. You have said the cost of living is very high. Then you still charge more taxes. So my net pay you're reducing, and the cost of living you're raising up. Things are becoming more expensive. So, it doesn't add up. You are making things more difficult. What we would have expected is that, look, things are bad. Let us give businesses more incentives. Let us reduce the cost of doing business, so that the cost of production and cost of products and goods and services will become low, cheap at least, so that you can survive. But what we are seeing is an IMF kind of thing, where you simply say, look, collect more money. But
does the IMF have no soul? Surely. Is it that they don't see?
IMF
because when you say increase that VAT on fuel to 8%, to 16% from 8%. The 8% already was a pain, and it was a whole negotiation to get to 8%. Initially, of course, IMF had wanted the
even
full 16.
8% was under their pressure, you remember?
It was the pressure for them to just bring it. Now, take it to 16%. That means everything else goes up. Cost of transportation goes up, cost of electricity goes up, cost of all these things goes up. Right?
Yes.
And if the cost of electricity is high, cost of fuel is high, cost of all these things is high, and then you say, all right, even tax more.
But is that not what IMF or World Bank have always done?
There is no country, look at Asia and Latin America, that have gone through hell with IMF, in the 90s, and even Africa, parts of Africa. There isn't any country that has gone through. IMF is like, if you will, it comes in when you're like in an ICU situation, and they give you a very, those jacks that are put on your chest. You try and either you recover or you die.
Yes.
But IMF is a bank, and the bank that looks at more the interest of the lenders than really, so that you must be in a position to pay back. That's basically what. That's why the director of IMF was very clear last week, unashamedly. She said, look, she was asked by one of the reporters last week, in this country, the Eurobond money, which is over $2 billion, is due.
It's due.
How are we going to, this country is going to pay it? She said, what's the problem? You can borrow commercially and pay it. It's you borrow money and pay it. So to them, it's the issue. The subject is always about payment of the loans. But I think, so employees, I would imagine things are going to be a bit difficult, like for most Kenyans, not only employees, but for everyone. I think the situation is, we expected these measures. What Kenyans wanted to see is that a situation where they'll be told our cost of living is going to go down because government is going to rationalize expenditure, government is going to rationalize some of the taxes, remove most of the inconsistencies. Our tax is still one of the highest, and I keep repeating this. Our corporation tax rates of 30% is among the highest, the second highest in the whole of Africa. You can't compare with many of the countries which we compete with that have 22%, 15%. Our VAT, they tell you it's 16. In reality, when you add what they call the levies, you try importing this thing, and you see the 16% VAT, then you have the 2% IDF and RDF, another 2%, another 2% of this, and it goes to 21%. And it's really, and then of course the tax on pay income for employees is the highest, actually, not among the high, is the highest in Africa. Already at 30%, threshold, it was the highest. Now when you are at 500,000, it goes to 35%. We are living like in Europe. But so at the end of the day, it's not about, for me, the issue is not about, everybody in Kenya is not concerned about so much what happens here. What happens, what is the main concern is where is that money going?
Yeah.
Absolutely.
Yes.
And even when you make the comparison, Billy, and say, okay, we're living like, Billow, we're saying, okay, we're living like those who are in Europe. That's okay.
No,
but one of my
taxed.
arguments is we're not living like those in Europe. We're being taxed like those who live in Europe. But the thing is that those who live in Europe and are taxed so heavily, up to 50% in some cases, can see the result of that taxation.
Medical cover,
Medical
education,
cover, health, education,
job security, social
infrastructure
security.
is
I mean, so
top
many
of the
things.
range. And here we are saying, do it some more. 4 trillion in another 4 years or so. 6 trillion in about 4 years after that. Where is it going to come from? I mean, and so here we are saying that the things that you talk about, reducing the cost of doing business, creating an environment whereby it's conducive for people to do business, to invite investors into the country, it seems that all of this is being done to do the exact opposite, to chase would-be investors away. And you're not just flirting with the possibility, you're actually courting, sitting down and having a dinner date with this thing, because people are actually not going to come. 1. 2, how do you deal with an already frustrated populace who before we saw things like this, people already crying about how life has become
you see, one of the things Kenyans will be looking forward to next month when they submit their budget statement or budget speech is how they will deal with the expenditure side concerns, for example, on corruption. Because they know that most of this money, it's not being spent on value for money because of corruption.
Exactly.
And let me tell you, if there's going to be a government where supplies to government is inflated, and the government will not be getting value, it is this government. More than any other I have seen. Already, the 6 months I have seen, the supplies to government, the contracts, everything is inflated crazy, including what's going on in KNTC and all these other institutions. So I think the thing that will bring these guys to their senses is when KRA, with all these measures, will not be able to raise this revenue, and then they will be forced to borrow. They've already done that, by the way. In the 6 months to December to January now, the government has borrowed over 500 billion. The same government that said we are going to stop borrowing.
Yeah.
Last week they signed on Africa Exim Bank to another $3 billion that they will need to take. Already they are borrowing more. And IMF is saying yesterday, the managing director was, she said, we're going to give you guys this country more money again. So you will be borrowing more, and the consequences of that is that the next few years Kenyans will have to dig deeper. Businesses will continue shutting down. Look, when you increase the threshold of turnover tax to 500,000, lower from 1 million to, what you mean is, if you are running a small hair salon, you are making 40,000 shillings turnover in a month, you have to pay tax on that 40,000 shillings. I mean, that 40,000, KRA doesn't want to know, that is turnover, whether you have made profit or not, or loss.
It is your turnover. As long as the money that has come in.
Please pay us on that. So this concept of trying, you remember they said when they came in, everybody is on Safaricom. So why should we not tax everyone? Mamangoy should pay something. Give us a shilling if you got 20 shillings. That's not the concept of tax. Tax should not be a burden. Tax is, it's got threshold all over the world. There's a threshold. That's why even on payee, when you're earning less than 25,000, you don't pay as you earn or income. The idea is there has to be a threshold. Below that, it's your own survival, really. And the government has no mandate anywhere in the world to tax people the way they want. You tax so that you can allow people also something in their pocket and also provide some services to the people you govern.
What I can't help thinking is, why is this government fomenting revolt? Because, yes, it's like any and every possible way in which you can make the lives of the citizens difficult, they're going for it. It's like they're leaving nothing to chance.
They know Kenyans don't revolt.
Exactly.
This country has been screwed up by every government for the last, I don't know. There was a time when the German ambassador said, if what is happening in Kenya was happening in other countries, people would be on the streets every day. But they're used to that. This is a country where people are very, they just absorb. I don't know for how long, but we were told by this government in their campaign platform, we will do an economic revolution.
And they're doing it.
you all assume that the economic revolution meant that things were going to do. Maybe the revolution is that things will go as high as possible. That's the revolution.
This is what they promised.
So I want to mention three things in this finance bill also, which are additional to the business. For example, where they said the definition of the word person. You know, in income tax, the person refers to an individual or a company who is required to pay tax. And they've expanded that definition in this finance bill to include relatives. That means you are responsible when you are dealing with your tax as a person. That person includes your relatives, your uncles and nieces and cousins and their tax.
How?
This is one of the most ridiculous things in this finance bill, and this they amend before it goes to Parliament.
Wait. Explain that a bit.
The second is...
No, explain the relative bit.
No, you see...
When you're paying tax...
You pay as an individual. You should not be concerned about the tax of your wife or your son or your daughter or your relatives.
So how do they want me to cover the relative bit?
This is something that is really ridiculous. That definition, if you look at it, the finance bill, you find they've expanded that definition to include relatives, but it doesn't make sense. I have no, under the Constitution, I have no responsibility really about dealing with that. The second thing which I found was also is the 10% export and investment promotion levy. Something Kenya Association of Manufacturers said is ridiculous, and they've tried to go against it. Because what you're saying is, if I am a manufacturer of this metallic products,
yes,
and I need to import some raw material, I have to pay 10% levy additionally on top of all those taxes, because you want to encourage local. Now, if the local one is expensive, for example, clinker, they have introduced 10% on cement.
Yes, they have.
Yeah.
So, and we import about 600,000-700,000 metric tons of clinker every year, because what we have here is not adequate. And what we produce here is expensive. What you are doing is then you are saying the cost of cement will have to go up, because nobody will import the clinker from outside because of this 10%
You have to
levy.
source locally.
So you have to source locally, and if you source locally, then the cost of production of that clinker is high already. You can't be competitive. So the cost of some things you are doing. You're trying to look for whatever to protect one or two companies, and this finance bill is something that is normally about the lobby.
Yeah.
So some of these things are based on protecting a particular industry, a particular company, a particular business that says I want to put this levy so that I am the source, or we are the sole suppliers of those things in the country. The third one is this thing about charging, that KRH will not give a prior notice. They'll simply write to the registrar of lands and secure your property in order to recover their money. I also find that to be
that's a bit ridiculous.
A bit ridiculous.
So what are our courts for then?
Yes, and the courts, they even said you can't go to court, you have to pay 20%. The idea is they want to discourage you from going to courts, some of these actions. But I think, so there are a lot of punitive things. There are one or two positive ones. For example, the LPG thing, I hope it works. They have removed the taxes on...
so you have 10 things which are untenable, then you have one which is supposedly tenable.
It's hustler friendly.
Billow, you said that a lot of these things that we see at the beginning is that they're political in nature, right?
Of course, budgeting is all politics.
It's all politics. At the same time, a lot of the promises that we saw being made during the campaign period were 1,000% political in nature. It was essentially manifesto, and it looked all glossy and very nice and very technocratic, but it was political at the end of the day.
The most prominent political statements in the campaigns were two, and you have got thousands of clips on that. One where they said we'll reduce the taxes.
This is it, and that's
what
I was about to say.
All over by the entire Kenya Kwanza coalition partners.
Exactly.
And we're seeing the opposite. The second one is on the debt. They said we will
no more borrowing.
Stop borrowing.
It was clear.
Both of them were at every rally that this taxes must be reduced by half. I remember Mr. Mudavadi, for example, in his campaign, it was categorical that he will reduce taxes they'll go down by half. But both of them, they're being done. Taxes are going up.
And more borrowing is happening.
More borrowing. And clearly, obviously, you see, when you get into government, you find so many other establishment.
Well, sure. However, but shouldn't there be, at least a little bit of an inkling close to what you said that you were going to do? There should be some semblance of your willingness to having,
By now, what they should have done is sit with their lenders, Kenya government should have, in the last 6 months, sat with every lender, multilateral and bilateral one, and tried to renegotiate or reschedule the loans as much as possible, so that at least the impact of the payment, which is what they said is the reason why they are going into this, can be, and there's no lender who does not, even your own banker. If you go and say, look, my situation is not good, can we renegotiate my loan? They will. I think that should have been their primary thing. The second is rationalized expenditure of government. We haven't seen that. We have seen a situation where the government has been expanded, leaving large, literally, completely, you cannot imagine. So, forget about the recruitments of this or that offices, but the expenditures, the way the money is being allocated and the kind of expenditures the government is going in, you wouldn't imagine this government is having serious problems with loans. You would think this government, everything is okay. When you have a situation where things are tight, you would see it on the ground.
Feel it,
You would feel it, and you would try to reduce this or that expenditure. Yesterday I was looking at the votes on for the State House, and I saw the Council of Economic Advisors. So the guys who determine all these things, and they're quite a team, and their budget is 189 million. Their vote in that house, and then 189 million. The Council of Economic Advisors.
What do they need that money for exactly?
Well, it includes all their packs and their
they need an office. It's a new thing. They need an office. They need furniture.
But they're based in State House.
So compare that to what the offices of the two first ladies got. 700 million.
Imagine.
And you're the economic advisors. But basically, I'm just going to give you an illustration that the government really should rationalize expenditure. In this country, that is our biggest challenge.
I always have a question and concern about the National Treasury. We talk about the people who work at the National Treasury, sharp brains, experienced and all, well educated, but they're the ones who draft these things. Is it that they succumb to political pressure, or is it that they are the ones who actually advise the politicians on how to?
Or are there some specific people who are given the task of drafting these nasty things? There's the people who have specialities in drafting such things. So when you want to draft something punitive, say good so and so.
Yeah. Because how can our best brains every year
come up with something like this?
Lead us to this situation?
And they understand their economics, they understand their finance, and they know these things are counterproductive.
Yeah, and let me say there are a couple of reasons why. You see, when you are in the Treasury, you are a political appointee of the president. You would then be, subservient to the appointing authority, and you'll try to do things that and in budget, let me tell you, everything in budget must be approved by the president before these things come to the public or to parliament.
Yeah.
All these documents, you sit with the boss, and he goes through. Says, okay, this one goes, this one doesn't go. So you don't want to be on the wrong side of your appointing authority. Second, you are given targets. Boss says, I want 3 trillion next year because I have to do certain things. So find out how you can raise it. So you tell KRA, I want 3 trillion. So KRA will take the Income Tax Act and go with a pencil and find out how they can. Media houses, media content, digital content producers, and do this and do that and recover this. You must pay now 15% VAT on your digital.
It's madness.
So you have to meet those targets. But I agree with you that Treasury should actually be an advisor to the government.
Yeah.
It should not be like other ministries, because Treasury is the one that is not only custodian of public investments and assets, but Treasury is the one that controls the economic policy of the government. It's anchored in Treasury. The resources of the government are in Treasury. This is an institution that can see the impact of every action here.
Yep.
On the future, on the economy, on the public, on the employment, on everything. They should be in a position to advise the government, no, this action is not workable. And this is why in certain countries, Treasury is an independent institution from Minister of Finance. I discussed this recently on some, and I was asked, and I said, in this country, independent offices have not been very successful. We have, this constitution set up many independent institutions and commissions, and the objective was to ensure that checks and balances in government, so that government does not go to excesses. But unfortunately, people have been appointed, even in those independent offices, have tended to play ball with the executive, and